Thanks for clicking on this video to learn about building an investment portfolio using the equity in your existing home. Watch this whole video, and if you like what you see, feel free to book a call with us, and any one of our portfolio realty agents will be more than happy to get you started. Hey man, are you Scott Schweitzer?
I am Scott Schweitzer with Portfolio Realty Group. And you are?
I am Chris Summerfield from Portfolio Realty Group.
Well, Chris, I guess we're here to talk about investing in our current real estate market using home equity to buy a rental property.
Yes, that is what my cell phone tells me.
And I think that you actually have some experience in this.
I do.
Right?
I do, yeah.
Yeah. Okay, that's good. And what was your first rental? Did you buy a rental? You bought a rental with your home equity? You had a primary residence?
Yeah, I mean, so I bought my first house 2015.
Okay.
When the mortgage was up for renewal, that's when I decided to pull out and look into an investment property.
All right.
So about 5 years after that, 6 years even after that, I ended up purchasing my first rental property. And this year, I just ended up purchasing my third.
Okay.
So,
and your first one, was that your first rental property that you bought with your equity? Was that just a straight rental property, or did you live in part of it and rent out a portion of the other?
Yeah, that's pretty much it. It was a duplex that we ended up purchasing.
Mm-hmm.
I ended up moving into one unit, and then we ended up keeping the tenants on the other unit and renting out the property that we were moving from. So we're jumpers. We were jumping from one unit to one property to the next.
Using your home equity?
Pretty much, yeah.
Okay.
Yeah.
And in doing so, what were you looking for? Did you stay in the neighborhood you were in? Is that because was it familiar? Did you look at other parts of Niagara? Where'd you end up doing this?
We always ended up looking at other parts of Niagara. I was always curious to see what investment properties would look like elsewhere, because I show other people houses all across Niagara. So I know what Fort Erie and Welland and Fawn Hill and Niagara-on-the-Lake and all these places offer, but I know what I like.
Yeah.
And I like downtown St. Catharines.
Okay.
So when the opportunity came up for another property in downtown St. Catharines, I jumped all over it.
Okay. Gotcha. And did you find, were you looking for a duplex, or was it anything over 2 units and you're even considering potentially a triplex or a fourplex?
We were pretty open-minded. We
Yeah.
were open to any and all possibilities. It really just came down to the price tag and if the numbers made sense.
Okay.
So for that particular property, for the duplex, the numbers made sense for us. So that's when the plan turned into, it's going to be a duplex.
So a key
there's
to
one
using
there.
your home equity is making sure that those numbers make sense.
Yeah, absolutely.
Right? And you were using the numbers based on you guys living there, so you knew that you were taking your current mortgage that you were paying.
Yep.
Right? And that having, maybe upgrading to a little bit sizable house, and more square footage potentially, and a second unit, that you could also use the tenant's portion of the rent to go towards paying your own mortgage. Is that correct?
That's right.
Okay,
Yeah.
good. I hope that was a little long-winded, but kind of giving everyone the step-by-step sort of, 4-point solution on how to make this equity, transition into owning, multiple rental properties, right?
And to be honest, when we first bought that first house, that wasn't really in the cards, or really was the plan in the first place. But then when you realized how much equity you end up having in your home, and you have these funds available to you to do something with, there's 2 paths you can go. You can either go buy a boat or an RV with it for something that doesn't appreciate in value, or you could invest in something that does appreciate in value, whether it be investing in the own property that you're living in, or taking that money and purchasing your investment property.
Okay. And I know that you have a young family, right? Did you end up using a fixed rate, a variable rate? Was there a strategy for how you were borrowing the money and what you wanted to do with it? Well, we know what you wanted to do with it, but was there a strategy? Did you feel a little safer using a fixed rate, or did you go on a variable rate?
Yeah, when it comes to my investments, I'm pretty conservative, so I like to keep everything pretty consistent.
Yes.
So that's why we stick with the fixed rates.
So you knew what your mortgage payment was going to be.
Yeah.
You pretty much knew, was it a similar size house in terms of what your bills would be? Because you got to think about your other bills, your taxes.
Yeah.
Right. You got to think about your utilities. If you're going into a larger space,
Yeah.
utilities might be a little bit more.
Yeah.
So you kind of had an idea what those were. You wrote them down on paper, spreadsheet style. Is that what you used?
Exactly. Yeah. We use spreadsheet style. We end up breaking down what our mortgage payments was going to look like, what our property taxes look like, what the insurance look like, and then you factor in the passive income that you'd be receiving for the rental, for the rent that you'd be receiving from the tenant, depending on what utilities that they're going to pay versus the utilities that you're going to pay, and if the numbers make sense, it seems like a good buy.
Move forward.
That's right.
Okay. And how about one other question that I had is, did you do any renovations to your last
Yeah,
purchase.
we factored that into our budget.
You did.
So the amount of money that we end up pulling on equity, we set a certain portion of that aside because we anticipated that there was going to be renovations needed for whatever we were end up purchasing.
Okay.
Albeit there was more renovations that we needed to do than we expected.
Of course,
but we
it
budgeted
happens.
for it, and we were okay with that.
So you took what your down payment would be.
Yep.
Right? If I'm just following this, you took what your down payment would be, your downstroke. You put X amount towards that. You knew you had available cash of X plus.
Yep.
And then you used that plus to do some renovations
Yep.
and make sure that it became home because you were going to be living in a portion of this
Yep.
property.
Yeah.
Okay, that makes great sense.
So I did it one way where I ended up moving into the investment property that I was purchasing, and then I rented out the existing property. What does it look like for someone that's looking to purchase an investment property that they're not moving into? They're staying in the home they're currently in, pulling equity from that house, and then purchasing an investment property.
Well, I've been a homeowner in my house for the last 10 years. So I had quite a bit of equity built up within my own home. With the appreciation of the house over the last 10 years, I was in the same position. I thought to myself, what can I do with this equity? And I answered that question the same way you did, by actually searching in a neighborhood that I was located in. Because I find if you're going to buy a rental property, it is nice to be able to keep your eyes on it. You potentially drive by, you see the shape of the house, you can see what might be going on the outside at least, right? If it's being kept tidy and clean on the outside, is the roof potentially, in good shape, not in good shape? These things that maybe if you don't buy anywhere near where you're living, it might kind of just pass you by, especially today with e-transfer rent, right?
Yeah.
It's set it and forget it. You might not ever see it. So the answer, a long-winded answer to your question is, I actually did the same thing. I took the equity out and I bought a duplex in St. Catharines. Yeah.
Okay.
So what I was looking at is I wanted to have two streams of income coming from one home.
Yeah.
And essentially that's what I did is I had that equity, took it out, figured out, what the down payment would be. I had a little bit of improvements to do because I did find a property that had a walkout basement. So that means that it had an entrance coming from the backyard into the basement. I knew it had duplex potential.
Yeah.
It was zoned R2, which is one thing to look at, although things are changing with Bill 23 across Ontario, where we're getting into, cross zonings where R1s can have duplexes and even triplexes in it. That's one thing to note. But I did see that potential that I thought to myself, okay, here's a single family home. I can turn it into two streams of income. I can take my equity out of my home, purchase the house, put the downstroke down, and also have some cash left over to turn the basement into a second unit.
Nice.
Yeah.
Nice.
Chris, when your strategy was to, accumulate property,
Yeah.
accumulate wealth through real estate, what's your long-term plan?
Honestly, my long-term plan is to hold on to my assets as long as I possibly can. I'm not necessarily looking for any type of quick flip situations with my properties. And that's really what a lot of people should probably be doing when they're looking at real estate investment. I know these quick flips has always been a big thing over the last few years, but the majority of people, if you're looking to invest in property, I feel like the long-term strategy is just purchasing property, parking it, and keeping it for as long as you possibly can, because that your equity growth will gradually continue. We'll see ebbs and flows in the market,
Of course.
but it's always going up because demand is always going to be there. And then coupled with that, while you're holding on to it, you're also receiving the passive income of the rents that you're accumulating on top of that property. So it's the only investment you can really make where you're seeing immediate return on the first of every month.
That's right.
So
Yeah. I know with myself, one of my strategies was when I started, dipping into my own home equity to buy rental properties, is that I looked at myself, I'm in business, I'm not working for a company, I don't have a pension, and I thought, how can I get to retirement and have passive income moving forward as I get a little bit older? I mean, I'm not at that age yet, but time goes by quick, right?
Yep.
So I've been trying to line myself up that, you never know how much you're going to need in the future, how much money to run your household. But hopefully after accumulating 1, 2, 3 properties, I'll be able to have passive income moving forward into my retirement and not have to worry about a pension. Chris, why is Niagara a great place to invest, especially in this time that we're in real estate right now?
in the grand scheme of things, although the pricing of housing has gone up drastically in the Niagara region, it's still favorably low in comparison to other places
Yeah.
in Ontario. So when you couple that with the demand of people that are flocking towards Niagara even still, and the need for housing in Niagara, it seems like a great opportunity to be a benefit towards the affordable housing issue and providing affordable housing for people. So then using your equity in order to purchase an investment property that will accommodate people that are in need of housing seems like a good thing to do.
Yeah, I've noticed, and we just speak geographically speaking, is that St. Catharines specifically is not really where it should be, and it has a lot to grow because we are landlocked in our boundaries, right? We talk about this all the time when we meet new buyers, is that we're landlocked by the lake. You're not going to build any new houses in the lake. You're not going to build any new houses going past 3rd Street because it's all tender fruit. We hit the canal on the east side, and on the south side, you hit the escarpment.
Yeah.
Because of that, we're landlocked. That means there's only 2 ways to go, infill or up.
Yeah.
If you own a property here, it has any land, it has potential to have a 2nd unit, a 3rd unit. It's still right now relatively inexpensive, and they're not going to be putting any more land in St. Catharines. So I look at St. Catharines as its own little real estate gem here in Niagara, just because I don't know if we're going to see that growth. So as the houses get built up, communities get built up, push further south and south and south, we're almost the first landing spot on the QEW corridor and we're going to, along the GO train, accessible to the GO train. I think it still has a run in us here.
Scott, I don't know what exactly home equity is. Tell me what it is.
Home equity is the equity and the appreciation at which our house has grown from the debt that we own. So if you take your debt and you put on the appreciation of what the house has grown to, that is the equity that you have in your house. And of course, you can't just take out 100% of the equity. Banks won't let you do that. So home equity is where you take a portion of that growth that's in your home. You take out a portion of it and you use it towards new financing on potential rental property.
So your equity is essentially the difference between the debt that you owe and the value in today's market, what the house is worth.
That's exactly what it is. Chris, can you tell me about some of the risks with using your home equity towards growing your portfolio?
Well, for me personally, like the one risk I was nervous about is interest rates, and as well as stretching myself out too thin as far as pulling equity. In an ever-changing market and the values of homes, even now, like fluctuating as they are, I was scared to pull out too much. Like I know the bank wouldn't let me pull out too much, but it was always a big factor that I might be stretching myself out too thin.
Sure. So is that why you decided to go on a fixed rate compared to a variable?
Yeah, exactly.
'Cause you wanted to make sure you knew what those costs were?
Try to mitigate those risks by making things more consistent and more predictable as far as what we were doing financially.
And you can set a monthly budget for your family.
That's right.
Yeah. All of us here at Portfolio Realty all have our own real estate investments. I think we all truly believe in the market.
Yep.
We've all taken equity from our own personal residence and put it back into the market because we believe not only is Niagara going to grow, but real estate in general is going to grow year after year. So we're not only realtors, but we are investors.
Yeah. So Scott, you're out on the market to purchase a new investment property. What type of things do you end up looking for in an investment property for yourself?
The first thing I look at is location. Location. And I don't just mean location, is it in a great neighborhood? Is it accessible to shopping, transit, highways, all the things that tenants are going to need moving forward? What makes their life easier? That generally gets a little bit higher rent if you're along the bus transit system.
Yep.
If you're close to the Walmarts, the superstores, things of that nature. If you're along the highway, tenants could be potentially going back and forth outside the community. So anything that's accessible, I always look for that first and foremost.
Yeah.
The second thing that I do look for is what type of quality of shape is the property in, right? What are we going to have to do to roll our sleeves up and put this in a position that we can rent it? Is it move-in ready? Or does it need a little bit of TLC? And I'm not afraid of the TLC because that means on the buy end, we might be getting a little bit better deal.
That's right. You got to factor that in, right?
Yes. So. And we all, I think as a group portfolio here, we all have a great team of experts, whether it comes to painters, carpenters, tradespeople.
Electricians.
Your brother.
That's right.
That's who I like to use, right? Because we have that team. When we go in and buy a property and we want to reposition it, makes it a little bit easier because we've been through the general contracting process.
Yes.
Chris, there's a plethora of different investment properties that you can invest in.
Sure.
What is there one that you've been a little bit more focused on? Because I know that we can do our investing in multi-res, right? You can get into a little bit more.
It all depends on what the client's looking for, right? So, or what you're looking for as an investor. There's a lot of different properties available to you that could be investment properties, right? Whether it be a single family home or a multifamily home, a duplex, a triplex. You can even go higher up and get more multifamilies that way. There's single family homes that can be converted into with in-law suites with separate entrances, right? Depending on the zoning. There's also condos you can end up renting out as investment properties, right? So there's all sorts of different factors involved. So it all really depends on what type of investment property that you're looking for and what type of tenant you're looking to house.
Exactly. I would echo that you really have to find the needs of your investor first. If your investor is looking for a little bit of what I call set it and forget it, right? They don't really want to deal with multiple tenants. They might not even want to deal with a lot of maintenance. Sometimes that condo market's a great market to get into. You can get into a low-rise condo. I know Ashton's in that market right now. And what you find is, your rents are going to be, they're going to be fairly substantial because things are neat and tidy, well taken care of.
Yep.
You do have to factor in that condo fee, but there's less to worry about, right?
Yeah.
So
you have those condo corps that factor in landscaping and snow removal and all these things that can be seen as amenities to tenants. So then they end up paying a bit more for it, right?
That's right.
So,
and that can be a great little subsector to get in.
do you manage your own investment properties?
I do. I have a small portfolio of 4 different units.
Yeah.
Well, I shouldn't say units, 4 houses that have multiple units in some of them.
Yep.
And I find it's not that difficult. It's very easy, especially with technology, with email, e-transferring now.
Yep.
It's relatively simple. I know that sometimes that investors, especially first-time investors, get a little bit afraid that it could be a little bit difficult. You might be a lot of hand-holding. Where do I start? What am I going to do? How do I find the tenant? How do I screen the tenant?
Yeah.
How do I do any small renovations? What happens if the toilet is leaking?
Yeah.
What am I going to do, right? I've always managed it myself. I think as a group of realtors, I've said this before, that we have our own experts, handy people that we can actually push off and share those numbers and contact information with. So I really don't think anyone should be intimidated to manage their own properties. It's really the easiest thing to do. I think when you get greater than 5 properties, you have to look at potentially a management company. Yes.
Yeah.
But really you can handle your own. You make sure you're invoicing your tenants at the end of the month. You're keeping a record of rent payments.
Yeah.
You can send out rental statements on an annual basis or a monthly basis.
It's probably good for peace of mind too, especially for someone that might be investing in their first investment property. You want to have peace of mind in your own investment and making sure that everything's tip top the way that you want it to be, right? And although there are more hands-off options available to you, it may not be a good fit for your first investment property. You should probably be more involved.
Yeah, I completely agree with that. Thanks for tuning into this video. If you are looking for an investment property and want to tap into your home equity, please click on the link below and we'd be happy to show you. It's not the link below, is it?
Click the link below.
Click the link below? Shit. Okay. Thanks for watching this video. If you're looking to tap into your home equity and looking for a team of realtors to navigate your way through the process, click the link below to book a call with us, and one of our realtors be happy to get in touch with you and navigate you through the process.